Hey everybody, Economic Ninja here. I hope you're doing great. And if you want to talk about real estate because you've been waiting to buy real estate or you're waiting to start crushing it with foreclosures, well, your time is coming, but it's actually already begun. That's right. We got new data about the housing market crash, really interesting things about inventory. And I talked about this last December when I said interest rates are going to start going up, primarily mortgage rates, which they absolutely exploded. And I said, get ready because you're going to have a burst of inventory hitting the market because it's always at the top like it was in 2006 as things started to get top heavy and all of a sudden people went, oh, that's it, run for the exits, we're selling our house. Okay, so now is unlike, well, let's put it this way, all over I hear people say this time is different, housing is going to keep going up, it's just going to slow. No, it is totally different in the fact that this is way worse. This is housing bubble 2.0. When you look at the last time housing went up a little bit and then it crashed down 40% or 50% in a lot of areas, but it did go down all across the board, right? That was back in 2008, 2010. Now housing has done this, and to say that this time is different, this is just going to slow down on the verge. I mean, we've literally just saw mortgage rates completely double. To say that it's not going to crash is crazy, but let's go ahead and dive in and talk about this article. I think this is absolutely phenomenal. All right, here. All right, major turning point. U.S. housing inventory rises for the first time since 2019. That's exciting. Why? Because 2019 is right before everybody's lives changed. I was running around warning a lot of those people that I know, saying your life is literally about to change and it's not a good thing. And people didn't understand that, even though housing rose and all that stuff. Well, by the spring of 2020, everything did change, right? And everything sort of got really out of whack, especially the real estate market. So it says right here, mortgage costs are at the most expensive in years as the Federal Reserve embarks on aggressive quantitative tightening. And again, guys, we have not seen the full-blown oomph of this quantitative tightening because it just started in June 1st. And we are going to see even more impacts in the bond market, more impacts on the stock market as these assets start to flood the market. It says, implying that the sourcing macroeconomic climate may not support extraordinary home price growth for much longer as the national inventory of homes increases for the first time in years. And this is according to Realtor.com. It says Realtor.com reveals the national inventory of active listings increased by 8% in May. Now, I want to stop right here and explain something. 8% going from pretty much nothing, right? Tightening as far as inventory, month over month, and then year over year, we saw inventory just shrink. Well, when inventory real estate shrinks, you still have a bunch of people that'll buy things at really stupid prices. I mean, have you ever seen the Beanie Baby market? Oh my gosh, to sit there and watch the prices go up and then just hit astronomical levels. There's always somebody that'll go, I'll buy, it's going to keep going up. There's always a buyer for the tulip mania or the emu mania or the housing mania. Let's put it this way. There's always, it's called the greater fool theory. Let's just be honest. There's always someone that thinks they're going to make a quick buck. And it's always the people last to the exits that fail. And that is what's happening. 8% from going from shrinking, and then an expansion of 8% is a really, really strong start to what I believe is going to be an explosion of properties that hit the markets over the next few months to 6 months. All right. It says it explained a major turning point in inventory has arrived and said sellers are fueling the turnaround in inventory with newly listed homes entering the market at a rate not seen in 2019. Now, let me stop real quick because there's always going to be that guy, and you don't want to be that guy, but there is going to be that guy or gal. But it's usually a guy. Says, well, inventory is not exploding in my area. Okay, cool. You live in a bubble and that's super neat. And I bet you I bet the climate control is amazing in there, but someday even your bubble will pop. Why? Because you're just walking around in your bubble and you're going to hit something sharp. Sorry, it's just how it is. When you're an investor, you need to think big term. I'm thinking my state, not only my county, that's what most people think, state, and then the nation. It's really big. You're like, think about this, guys. The nation was affected with the real estate boom because of all these crazy people coming out of California and New York going, we're getting out of this place. So it wasn't, your area was affected by Crazy Town. Yeah. All right, let's keep going. So says right here, the most significant increases in active listings were mainly in the West and South. Largest metro areas where supply returned were Austin, Phoenix, and Sacktown. I have friends in all of those places, actually. And I've been talking to you guys about real estate and say, don't you worry, it's okay, it's coming down. And now it's funny because right now, just because we have an explosion in housing inventory, and is 8% explosion? In my mind, it is, because I'm super excited. I'm looking farther term out. For a lot of people, 8% is like, hold my soda, watch this. But my point being is that they're still going to take some time, because now days on market are expand even farther. We've already seen days on market expand, essentially double in my area in the past 90 days. Now with greater inventory hitting the market, it's going to even increase even more. And then by the time you start seeing 90 days, when people listings on, you're going to see a lot of price reductions. I get it. There's price reductions already in Texas and other places, because I'm getting the emails and I'm searching the listings as well. But you have to remember, there's still that point where it's slow. And honestly, let's call it real. As people see more videos like this on YouTube or news stories hitting the headlines, they start to get worried, and they were thinking about selling their house already, or selling a rental property or an Airbnb property that they literally just bought for Airbnbs, but now all of a sudden, like in the Hamptons, nobody's renting them. They're going to dive in too. So it's going to only exacerbate the issue. And I only say it really slowly because I can't pronounce it most of the time. All right, guys. Increasing inventory last month has yet to make an impactful dent on price growth. The Case-Shiller newly minted S&P Global Home Index data surged to a new record in March, showing the 20-city composite surging 2.2% month over month, more than the 1.93% expected, and surging by a record 21% year over year. Now, again, guys, I want to explain that, because you're like, well, wait a minute, hold on. There's inventory hitting the market, but then there's prices going up. What you have to realize, first off, that is going back in time a little bit. And there was a period of straight up panic from end of January till, well, essentially last month, when interest rates really started to move up and people panicked into the market going, oh my gosh, I better buy now, or I'm not going to build it for the house because the house price is going up and the interest rate's going up. Okay. So that's a last minute panic called a blow off top. All right. This is what gets me really excited, because like I said, we're just going to stop here and we're going to share the article. You could read all that. You don't need the ninja messing up the words anyway. Words. Point being is this. From the beginning of this channel, I told you that I wanted to be able to document and show you in real time what a collapse looks like. And that is exactly what we've been doing. We have been watching housing go up. I called the top of the market in June, end of June, late July last year, and I nailed it. A lot of people go, no, you didn't. You're an idiot. Yeah, they're gonna say it. But like housing prices went up. I'm like, that's not the top of the market. That's the end of a market. It dies. And what happens is people don't have the money to buy and sell homes, and the velocity of home sales, the money moving between home sales, dies because people literally either stop because of fear or they don't have the money to. So then you have a little blow off top, right? And this time was very interesting because we coupled that emotional peak with low interest rates, and then interest rates curved up, and then we had fear buying. So this was a nice little blow off top. Quite frankly, it would have been very hard to pick that as an analyst. You know, it's always impossible to hit the tops and hit the bottoms. I just want to be able to get into the upper or lower third of that quadrant. And then I'm doing good as an investor, right? Because I'm not buying just one house to make a little bit of money. I want to buy 20. I'm not joking. If you know how to buy homes, you know how to flip them, you know how to rent them, why would you do it with just one? I'm going to do it with 20 or 100. That's how I think. And that's how I want you guys to think. I want you to think bigger. I want you to think nationally. I want you to think globally. All right, guys, that being said, I thank you so much for watching this. If you got something good out of it, hit the thumbs up button and subscribe. That's a shameless plug. And with that being said, the Economic Ninja is out. Now I just got to find that button. How do I hit the button? Okay.